Good morning. It's time for week 3 of our Death Binder series. Hey, Pedro. Hi, Pedro. So, just in case you think I have it all together, last week I didn't have my John Deere hat. And 15 seconds after looking for my hat, after my husband realized that I said I had lost it, he found the hat. But the hat is currently now in a bag in Belgrade because I took it somewhere. So I still don't have my John Deere hat, nor can I find my burnt orange t-shirt that I was going to wear to avoid decision fatigue on what to wear. So that's the setting for today. Today we are going to be talking about all things insurance. So as far as the table of contents goes, we are in this insurance box. And my special challenge today, I have a couple of challenges, um, is to talk to everybody at once. There's a diverse group of people that are listening in all different stages of life. And so talking to everybody at once is a challenge, but we can do it. And I another challenge is to not overwhelm you. A real danger for today is going to be getting overwhelmed and say, forget it. All right. Remember, your enemy is perfection with this. You want to make progress on each of the things, or maybe there's going to be a couple categories and you say, nope, I'm not doing that. That's okay. We're just going to make some progress. Now, I do want to say, when you're a famous YouTuber, you're going to get some hate. So I got some hate about my treat from last week. But for the people who gave hate, now loving hate, I don't think anybody was actually upset. That would be silly. But for those people who thought my treat was a bad idea, I just want to say I got 2 emails to my Death Binder email telling me fun stories about that treat. So I'm not going to share those stories, but just so that you know, everybody has a different sense of the word treat. And today's treat is going to be of a much different flavor than last week's. And if you're wondering what is last week's, and it's because you didn't do lesson 2, you should go do lesson 2 first. Okay. So the first part of our insurance part of our death binder is car insurance. So, what I want to do with each of these parts today is to give you a point A to think about. And if you want to stop there, fine. Or if A is easy, or if you're wanting to challenge yourself, I'm going to give you a point B to think about. And then I'm going to give you a tip. So, our learn section of today is going to be modeled as a point A, meaning I really think you should do this, a point B, meaning if that was easy and you're ready for more, do this. Or even if had to do A, but you're ready for more, also do point B. And then also a tip on the topic. So the first thing is car insurance. So with car insurance, um, part A is going to be to put your policy information in your binder. Now, I'm going to say that phrase repeatedly today. And when I say put your policy information in your binder, what I mean is, let's see, I got to cover up my passwords and username, right? But I mean, here's my policy. I include contact information, my login, the URL to get there online, the username, the password, and then underneath I have written a little statement that says paid annually online around August 1st. Okay, so that's what it means to put the policy information in your binder. Put the policy there, put contact information, put the online information, the URL, your username and password, and put a little note about how and when it's paid. Okay, so that's part A for your vehicles. Part B, if you're ready for the next step, check to see if what you have is the best policy for you. Um, Now, I don't want anyone to hate me if you work for some place like State Farm, okay? But if you're getting car insurance from a place through State Farm, like if you call up State Farm and ask them to give you a quote on insurance, they're going to give you their insurance. What I like to do is use a broker. So, I use Kai's Insurance in Farmington, Maine. So a broker is someone not that sells their insurance, but will shop around different insurances and help find one for you. So perhaps it's time to contact a broker to see if there is a better insurance policy for you. Okay, now my tip with car insurance is review your policy for savings. So, for example, if you have children, do they have good grades? Because there can be a savings for good grades. Or maybe they didn't when you originally got the policy, but they do now. So that is something that you would contact your agent about because there is a discount for that. Um, Another thing is, are so when you have multiple cars and multiple drivers, every car has to have a rated driver. So the driver that is used to determine the insurance amount for that car. I've asked my insurance person to check that, but even after I discovered that it wasn't done optimally, the idea really, and they know this, I mean, sometimes mistakes happen. The idea is you want to take like the worst car and the most risky driver and pair them together. So our oldest car is the rated driver is my 18-year-old son, okay? The next worst car is my 19-year-old daughter. I don't think there's a difference between Nick and I with the other cars, but that is something to look into. Okay, number 2 is homeowners insurance or renter's insurance. So if you are a renter, you need insurance. It doesn't have to be a big policy, but it should be some sort of policy. So if you're a renter and you don't have insurance, step A is to get that. Same with homeowner. If you own a home, you're going to have insurance. And so step A is to either get the insurance if you don't have it, and or put the policy information in the binder. Now, step B, combos with money are very rarely worth it. Like when you start combining things, it usually doesn't work in your best interest. However, I have a lot of mosquitoes. However, combining car and health insurance with the same company is usually a very nice discount. And so, if your homeowner's policy and your car insurance aren't combined, then maybe you should go back to the whole broker thing that I was talking about and look for the best homeowner slash car insurance policies. So that again is going back to see part B is is what you have optimal. So then a tip for homeowners insurance is look at the details. It's very annoying for me that things like automatically change without them asking me, or maybe they asked me in one of 20 million emails that I didn't get. But it was a couple years ago, I was looking at my homeowner's policy and I noticed that I was paying a certain amount of money for jewelry insurance. That was part of my homeowner's insurance. Okay, my only piece of jewelry is I have my wedding band and my engagement ring, which has 5 stones, 3 diamonds, and 2 blue, I can't remember what they're called, they're my birthstone for December, and all the diamonds have fallen out. That is the extent of my jewelry, so that I pay that I was paying anything for jewelry insurance was ridiculous, so I canceled that. So look at your insurance policy. Are the parts that you are paying for actually things that you need? Okay, step 3, health insurance. This is not optional. Um, First, let me just say this, it's not optional ever. I remember when Nick and I were moving from North Carolina to Maine, and we had this, like, gap in employment, and so we didn't have coverage. and we had 2 little babies, and we basically went a month without insurance, and I thought every day I just woke up, like, "Should I take the kids to the playground? Because 'Cause they're probably gonna break something." Like, the stress of that 1 month without insurance is so stupid. I should have just paid for the gap insurance, and I was thinking, "I can't afford it. We can't afford it." And the truth is, when it comes to health insurance and you think I can't afford it, the truth is you can't afford to not have it. Not having proper or any health insurance is the number one thing that bankrupts people. So strongly so you have to have appropriate health insurance. Now part A is to get copies of your health insurance policy in your binder. And even more important than that, and this is not written on the skeleton, I need to revise the skeleton a little bit. I want you to take pictures. Let me see. Do I have pictures? Yes. I want you to take pictures of your insurance cards, front and back. With my mom and dad, I use these all the time. So you want pictures of the insurance cards, front and back. Sometimes there's information on the back that you will be asked for. Sometimes it's just a phone number. Um, but I have our health insurance front and back. I also have dental front and back. If you had vision, front and back. So I want you to have your policy there and your contact information, but more importantly, have copies of your cards in the binder. Really, step A should be copies of your cards. Step B could be get additional information there. Um, Another step B, or maybe we'll call it step C now, is if that's really easy for you and you have that done, you could go into a little bit of a review process. Because the thing is, once we get signed up for a certain kind of insurance, like at work, it's easy to just like stick with it. But maybe your work has an HMO plan or a PPO plan and you don't want to think about the difference. You just stick with what you have. But your needs might be different. It might be worth calling HR and having a talk with somebody. That's their job, is to help you. So that might be worth it for you. Another question in this step C is, if you have dental insurance or vision insurance and you're just assuming that it's worth it to have that, I would like you to price that out. This is again step C. Just ignore me if you're already like overwhelmed with this. But very rarely have I found vision and dental insurance policies, like, to be worth it. My work now has a sort of medium dental policy that actually is worth it. But don't assume just because it's offered that it is good. That is just not the case. Now, my tip is for my seniors. When you get into needing Medicare, there's Medicare Advantage plans, there's Medicare supplement plans. It is overwhelming. When I was making these decisions for my parents, I found it completely overwhelming. Here's who to avoid. You want to avoid like Medicare Advantage salespeople who will come to your house and act like your friend. Now, maybe these people are very nice people. I'm not doubting that people can be nice, but their job is to be a salesman. They are not your friend. And they are going to talk about what they have as if it's the best thing for you, even if it isn't. I got schmoozed at Dunkin' Donuts by a Medicare Advantage salesman guy. And I ended up making a decision where after I talked to my mom's um, nursing home, realized it was not the best decision for her, and I had to undo it. So the salespeople for those plans are not the people to talk to. The people to talk to, I've had wonderful success with a group called Seniors Plus. Call them, not everybody, but you just keep calling until you get that person who you really think you can learn from and who is willing to take the time to help you. You call, you go in person. There are lots of Senior Plus locations around or other organizations like that. Um, so that's who I would recommend talking to in order to help you make these decisions. Okay. Number 4, we have long-term care policies. Now, step A, if you are less than 55, I'm going to give you an out. You don't have to think about this. Okay. But if you have a long-term care policy, of course, step A is to put it in there, put it in the binder. But if you are younger than 55, I think you can ignore what I'm saying right now. But if you are nearing the age of 60, so I'm going to say 55, it is very much worth you thinking about long-term care insurance. Here, nursing home care or 24/7 home care is expensive. We are talking $100,000 plus per year expensive. Um, $100,000, I think, is on the lower end in Maine, um, and in other states. So it's expensive in the typical scenario. A typical scenario for a married couple is that the husband dies first. The average nursing home stay, I think it's around 2.3, don't quote me on that, but it's around 2 years. So there goes $200,000, burns through the savings, and the other significant other is left without. Do not let that be your story, okay? And so if you're nearing the age of 60, and I say 60 because that's when I think it becomes financially, a good decision to start doing this, um, you want to start thinking about long-term care insurance. Now, perhaps for this year, learning is what you are capable of. Okay? That it can be part A. If you have nothing, then maybe you just need to learn about it and take it really slow. Um, but I would suggest start investigating long-term care policies. Um, because you don't want someone to burn through all of the savings and leave the other one without appropriate money in order to care for themselves in the last years. Now, part B is a little different. This part B is talk with your loved ones about this. Talk with your kids or talk with whoever is, you might leave behind about what your vision for your final years is so that everybody is on the same page. Maybe there's like you are so anti-facility and you're like, I'm going to stay in my home for the entire life. Well, you may be looking at needing some 24/7 care. I mean, hospice is there, but not until a doctor says that you're going to die within 12 months. You can't really, and hospice is not 24/7 until the very, very end. So you can't be relying on hospice for all your needs. Um, and so putting thought into how you envision your last years to go and talking with someone about that, I think is important. Okay, now a tip is perhaps you are self-insured. So if you have the money saved somewhere that would cover a few years of nursing home or in-home care for each member, either yourself if you're single or husband and wife for you and your spouse. Um, th- then if you have that money, then you might be self-insured. And so even if you are 60, this is might not be an important point at all. I was gonna say a moot point, and I had that flashback to Friends where Joey was said, "That's a moo point." Uh, if okay, that was a good episode. All right. Number 5, life insurance. Okay. So part A is, of course, to go through, get whatever life insurance you have in your binder. Okay, now part B is to ask, is that enough? It is not. So first of all, I want to give you my vision. I'm going to insert my vision of life insurance. Life insurance is designed to cover so that your family would not financially notice that you weren't there when you die. Of course, when you die, they're going to be very sad and affected by the loss of your presence. But life insurance is made so that they're not affected by the loss of your income. So, if nobody is depending on your income, you do not need life insurance. But if people are depending on your income, you do need life insurance. Now, suppose that you are a stay at home parent. and you don't have an income, your family is still dependent on you financially because you are providing so many services where if you weren't there, they would have to be paid for. So if you're a stay-at-home parent, you definitely need life insurance. The idea is roughly, these are big numbers, so don't persecute me if you don't agree with all my assumptions, okay? But the idea is if you make $50,000 a year, that's what your family depends on. I want you to have 10 times that in life insurance. So 500,000, because then if that's invested in good mutual funds, it's going to give you 10% return, which is 50,000 in return. And so in perpetuity, which means going forever and ever and ever, 50,000 would come off every year in interest and would replace your income. So that's the idea of life insurance is I want you to have 10 times your income in life insurance if somebody, your family is depending on you. If nobody is depending on your finances, then you want to be investing in other things, not life insurance. Okay. Now, part B is, do you have life insurance in the appropriate places? If all of your life insurance is at work, that's not a good thing. And I didn't realize this till probably 7 years ago. If all of your life insurance is at work and you get cancer and you have to get done that job, now you don't have insurance through your job and you're also not insurable. So that is a situation you do not want to have happen to you. You want to avoid that. So having life insurance, at least some life insurance outside of work is important. Um, okay. I don't know how to say this politely. This is why I'm stumbling. Some life insurance, a lot of it that's sold is crap. If you have a life insurance policy that combines life insurance and savings, they're called universal life or whole life or things like that. I'm sorry, it's not good. And I could elaborate. I'm not going to here. If you have a question about it, you can email me. What you want for life insurance outside of work is term life insurance, meaning for 20 years, I have a life insurance policy for $750,000, which means if I die in the next 20 years, I'm going to pay an annual, I'm going to pay a premium every year. And if I die in one of those 20 years, my family gets $750,000. You want term life insurance for a fixed term that has a fixed rate for that length of time. On in the skeleton on the life insurance page, it tells you who I think is a good place to start with. I got our life insurance through Xander.com, and they will shop around. It's like a broker. They will shop around and help you find a policy that is appropriate for you. My tip, and I've already talked about it for the life insurance, is that not everybody needs it. So I want you, don't assume you need it. If no one's depending on your income, you don't need it. And there are better ways to save money for giving in the future than using a life insurance policy as that vehicle. Okay, step 6, umbrella insurance. I know this video is longer. There's a lot to do with insurance. Umbrella insurance is something that I learned about in the last decade. So, what umbrella insurance is, it's an umbrella. It's sort of raining right now, which I should have an umbrella over my computer, but we're going to just let this go. It's just drizzly. It's an umbrella. So, here is your house insurance. Here's your car insurance. Here's umbrella. So, if you have an auto policy, for example, and you are the cause of an accident, it's very likely that um, the financial burden on you might exceed the amount on the policy. Like it doesn't take much to get to, $1 million in liability. So what an umbrella insurance policy does is it sits on top of your house and or car insurance, and provides additional insurance. So if you tap out and use up all of the car insurance, then the umbrella insurance would kick in. That's what it is. So step A is, do you have it? And if so, include it in your binder. Step B is, if you don't have it, do you want it? Um, so I think on the skeleton, I don't know if I gave a recommendation, but usually umbrella insurances are found through where you would have your combo house and auto policy. Your same insurance will have an umbrella policy, and umbrella policies are cheap in the insurance world. We have a $1 million umbrella policy, and it costs $150 a year. So as far as price, I think it's a good bang for your buck. Now, the tip is not everybody needs umbrella insurance. And so, I'll give you a couple of rules of thumb for deciding if you should think about umbrella insurance. Um, Let me talk about net worth a little bit. The net worth is how much do you have in assets? What do you have minus what do you owe? So if you have $200,000 in um, a retirement account, but you owe $500,000 on your house, your net worth is 200,000 minus 500,000, negative 300,000. Many, many, many people have a negative net worth. If you have a negative net worth, you do not need umbrella insurance. If your net worth is getting higher, though, that's when you start considering umbrella insurance. I would say if you're getting to a net worth of a $500,000 or so, to start considering whether or not you would like to have umbrella insurance. Okay, number 7. This is not insurance, but this is I put it in the insurance part because it's like protection, identity theft protection. I'm just looking at my policy now. In the death binder on the skeleton, I wrote my recommendation. By the way, I do not work for Zander, Zander, Zander Insurance. I do not get like I've never talked to anybody except to get information. The reason why I keep recommending them is I've found, well, first of all, they're a broker, they search among many people, but I have found that their policies and sites are easy to compare, easy to navigate, and easy to get. But Xander has an identity theft protection offering. So, with identity theft, the thing is, if someone steals your identity and charges a bunch of stuff to your bank accounts or your cards, you are not liable. You are never liable for the damage that's done if your identity is stolen. However, to get the situation dealt with takes time and energy that most people do not want to spend. Or and even if you can spend it, it's a headache. So, what identity theft protection is, what a quality program would be, is that if your identity is stolen, you call them, they assign a case manager to your case who works to take care of all the problems, changing over your cards, um, working with helping you with banks. I'm just reading like the list of things. They have a lost wallet service. So if your wallet was lost, helping you cancel things that would have been in your wallet. Security card number monitoring, change of address monitoring. They have a lot of things that they monitor. I think it's 3 times a year, a report about in general the health of my stuff. If anything looks suspicious, they contact me. So I have found that the identity theft protection through Xander is very useful. It's $145 for 1 year for your family, which includes all dependents. So I think that that is well worth it. Okay. Um, So part A is if you have it, definitely get it in your binder. And part B is, and if you don't have it, do you want it? And my tip is how to tell if a identity theft service is quality is whether or not you have this specific case manager assigned to you who you can be one-on-one contact with and not go through a long like press 9 press 1 for a half hour. That's what would make an identity theft protection service more one that's quality. Okay, that's a lot. It's a lot. Thank you for sticking with me. Let's do the recap with our do. And if you're feeling overwhelmed, I want you to identify 2 things that you're gonna work on. Just 2, okay? Um, that is better than nothing, way better than nothing. So, here's a list to recap everything. Number 1, in your death binder, get your car insurance information. Having car insurance is not optional. I sound like a mean teacher right now. I'm gonna tell you what's optional and what's not optional. Okay. Number 2, homeowners insurance or renters insurance. Get that in your binder. It's not optional. Number 3, health insurance, not optional ever. You can't afford to not have it. Get those cards in the binder. Never go without health insurance, in case I was unclear. Number 4, long-term care insurance. You need to think about this if you're nearing the age of 60. Talk about it. It's optional. Maybe you don't need it, okay? But it's something to think about. Number 5, life insurance. Again, do you need it? Um, do you have a bad policy? I'm sorry if you do. It's time to get out of it and get a good policy. Okay. Um, If you need it, if you have loved ones who depend on your income, this is not optional. You do not wanna die and be like you do not wanna have the thought, "I'm sure my family could get by." Like, we want your family to do more than get by. We want them to not be financially harmed because you're not there. They're going to be hurting because you're not there. We don't want them to hurt financially. Okay. Step 6, umbrella insurance. This is optional. You consider whether you need it. In step 7, identity identity theft protection. Optional. For some people, it helps them sleep better at night. For other people, you wouldn't mind making the phone calls and spending the time if your identity was stolen. I want to remind you of my email deathbinder23@gmail.com, where I'll field questions. I'm really not an expert in any of this stuff. I just sort of have the perseverance to keep learning and doing. So I'm happy to try to help you answer questions if you have them. Okay, it is treat time, and I changed my treat again last minute after putting this lesson together this morning because this is a lot. And the original treat that I had planned, it required a little bit of work, and, like, I don't think that that's what we need this week. So, here's our treat this week. It's actually a 3-in-1 treat. I want you to treat a friend to ice cream. I don't like treats to be food related all the time, but it's okay this week, okay? Treat a friend to ice cream. So this is 3 treats. 1, you get ice cream. 2, you get to hang out with a friend maybe that you don't see regularly. And 3, you get to treat them and see how happy they are because they're treated, okay? Also, if you're gonna go for ice cream on this special occasion, get what you want. Get the specialty cone that's chocolate coated with nuts on the outside with your favorite ice cream in the middle, okay? Don't skimp on that and be disappointed about your choice. Okay, this was a lot. Thank you for sticking with me. And next week, we're gonna talk about wills. I'm not going to say that's going to be easier, um, but you are going to feel so happy at the end of this 8 weeks when your death binder is closer to. I'm going to say it's never completed because it's a living document, but when you have a lot more progress on your death binder than you did when you started, that's going to feel really good. And this week, if you get that information together, it's already going to feel really good. All right. Have a great week, and I will see you next week.